Like the old high school quarterback who won't let go of the big game, the Southern California housing market may have peaked early this year. We found an interesting trend in the Altos Research data, plus median home price increases in Southern California are slowing. Where are you going to find all this riveting data? Right here in the Southern California Housing Market Report. And away we go, diving into the single family data for Southern California. We're looking at May's, the full month of May, going all the way back to 2018. And why are we going so far back? Well, 2018 and 2019 were more normal years in May. Then 2020, anything but normal in May that year. Huge run up in sales 2021. 2022 still on fire. Well, in 2023 and 2024, different story. Now we can see for Orange County, when we look at the number of properties that are sold, that's yellow. Number of properties under contract, that's white in escrow. So that is buyer demand. And then the number of new listings in red, that is the seller supply. And we can see when we look at these numbers that we're still at pretty low levels for all three of those. When we look at 2024, we are up year over year for pending sales in Orange County. It's not a huge increase, but it's up slightly. And we're also up for new listings. Again, not a huge increase. We're going to see bigger increases in new listings and inventory in some of the other markets that we're going to look at, some of the other counties. But right now in Orange County, we can see things are up year over year, but we're not racing through the roof. And the gap between the number of properties under contract and number of new listings, very tight. 2021 was slightly tighter, and that was a crazy time if you're out there shopping. So Orange County market appears from these numbers to be moving along very solidly. But we got to see what's going on in median home price and Altos Research data. And here we go already in Los Angeles. We have almost 1,000 more new listings year over year. And we have a slight increase in the number of properties going under contract year over year. So that gap between the number of properties under contract and the number of new listings, that's starting to widen in LA. Riverside, we can see another case where we're up year over year. Also slightly up for properties under contract and up a little bit more for the number of new listings. If we continue to see new listings come at this rate, at the same time we see that pending sales move at this rate, only going up slightly, that we could get to the point where we have more inventory and it starts to look like a gap like this in 2018 or 2019. San Bernardino. Now San Bernardino, it is very flat year over year for number of properties going under contract. We have a difference of 3. So that's basically the same number, but at the same time, we have an increase in the number of new listings. So this one year over year is very flat, and these are certainly record lows for number of properties going under contract when we look into past Mays in San Bernardino. And we're seeing that, and it's going to be reflected in the median home price, that things are changing in San Bernardino. We have a listing we just put under contract. Knock on wood, we get that closed. Ventura, we've seen demand continue to soften year over year, and we've seen supply increase year over year. So again, down from 2023, record low levels of number of properties going under contract. So that's buyer demand, and then the inventory is coming. And we're going to continue to track this and see, we may actually get to more normal levels of new listings coming. At the same time, we're at record low pending sales. That could lead in Ventura to bigger price reductions. And finally, San Diego looks a lot like Orange County, and it's up for number of pending sales year over year, and the inventory is up as well year over year. Not a huge gap between those two numbers. So we can see the gap between new listings and pending sales in 2023 and 2024 is pretty tight, and about the same as it was in 2021. So San Diego is a market that's moving along. And the multifamily numbers, one of the only places you're going to get these numbers. We asked if you wanted to keep them in the report. You said yes, so we're keeping them in the report. And look at Orange County multifamily. So this one is unlike any of the other counties. We can see the new listings are off the charts, higher than it's been in May's going back, but also the pending sales are way up, only eclipsed by 2021 when rates were about half of where they are now. So these are crazy numbers for Orange County multifamily. Shows that this market in previous reports had been slowing, but is definitely moving along for multifamily, and we'll have to keep tracking it to see Crazy high interest rates comparatively make it tougher for properties to cash flow. So not sure why so many properties are trading in Orange County. Money could be coming from other places like LA because of strict rent control there and some of the fears that landlords have in the Justice for Renters Act that'll be coming in November. We're going to be releasing more content on that. Los Angeles multifamily, this is more traditionally what we're going to see in the counties. Down here, we see that we're up slightly year over year for number of properties going under contract, up slightly for the number of new listings, actually pretty closer to more normal levels for new listings. So we will have to continue to track and see. Doesn't have the huge spike in 2021 that we saw in Orange County. And don't forget that in 2021 and 2022 that we had in LA an eviction moratorium. So it was very difficult for landlords to evict renters who are not paying rent. And this was extended beyond what we had at the statewide level. So locally they had that in place and we had released a bunch of videos on that. Riverside inventory is up. We got a big gap because the number of properties going under contract is up year over year, but not at crazy high record levels. So you can see that big surge in 2021 like we saw in Orange County when interest rates were low and a lot of demand. So we'll have to keep tracking this to see. Quite frankly, it's surprising to me, and I said this in a few videos recently, that we're not seeing stronger numbers in Riverside and San Bernardino. Let's go ahead and pull that open. So we can see that we're up there in San Bernardino year over year for a number of properties going under contract, similar to 2022. Inventory is up, but nowhere near 2018. These numbers for properties going under contract in Riverside and San Bernardino should be more solid because these tend to be higher cap rate environments for investors. An investor could trade at a lower cap rate in Orange County, potentially LA, and come out to Riverside or San Bernardino and buy at a higher cap rate. So that's interesting to see that numbers stay down in those two markets. Ventura, we are always all over the place. Not much to read into this. We can see that we're down for record lows on the number of properties under contract, and we're also down on inventory. If we see what's happening in single family start to happen in multifamily in Ventura, that market is going to be suffering and we're going to see price drops. In San Diego, inventory is way up, as same levels where it was in 2021. Number of properties under contract up higher than 2022 and 2023. But nowhere near 2021. So things are moving along. That is a pretty big gap between the number of new listings and pending sales. So we'll have to keep watching this to see what happens. Not like Orange County where it's through the roof for pending sales. Next up, median home price. And let's take a look. So we can see for these three counties that we are up month over month, and it's relatively flat in Riverside, a tiny increase. Up a little bit in Orange County and LA. Year over year, big increases, 17.1% in Orange County, almost 10% in LA, and 6% almost in Riverside. Now, all of these three counties are above the peaks that we had in April or May of 2022. So we can see that the median home price now is higher than it was back then. We will not be able to say the same thing when we look at some of the other counties in Southern California. Looking at the other three counties, we can see month over month we are very flat, and in San Bernardino we're actually down for median home price. And we're up year over year. So San Bernardino 5.2, Ventura 3.1, San Diego 9.5. What's interesting, that 3.1 that Ventura is up year over year essentially is wiped out by inflation. So in inflation adjusted dollars, Ventura, it looks like year over year that values have dropped. And comparing to those peaks that we had in April and May of 2022, we can see that Ventura at 875 is actually down. They're only at 861. So that is down from the peak. And additionally, when you adjust for inflation, definitely down. And then San Bernardino at 525, we have that month over month drop. That matches where we were in May of 2022 for San Bernardino. So flat from the peak. San Bernardino is trending down, so we may start to see that we've already peaked for median home price for this year, and that'll start to go down for the rest of the year, which will put it below the peak. So interesting trends, some way up like Orange County and some flat or going the other way like Ventura and San Bernardino. You know I love the Altos Research Reports. In fact, I just had Mike Simonson on for a live stream a week or two ago, so make sure you check that out. Like we talked about in the beginning, that old high school quarterback who won't forget what happened in the big game and peaked early. Well, we're starting to see what looks like an early peak in the demand for homes, and we're going to explain what we mean by that. So starting with the national numbers, when we reload this so you can see it, you can barely see it in this market action index infographic, that we're actually, as compared to last month, we're lower when it comes to the market action index. Now, lower means buyer's market, higher means seller's market. And when it was at its craziest, for example, in San Diego, it was at 100% seller's market. So these peaks mean it's much better for sellers, and the troughs mean it's better for buyers. And look back in 2019, how flat it was throughout the year. And these are national numbers. Then we got into COVID, it got much better for sellers and kept getting way better for sellers. The little diamond or year over year marks. Now, what happened here, what we see in 2022, this is when interest rates started to go through the roof. So it was a crazy seller's market. Prices peaked. Remember, April or May of 2022, we saw the median home price peak in Southern California, and then it turned, became a buyer's market as rates continue to go up. Market rallied a little bit, and we can see here that the peak, just like we had in 2022, the peak was earlier in this year. So it peaked, and now that market action index is starting to go the other way, and we still have to get through what's typically the busy summer buying season. So here we are looking at California statewide. Again, same trend. Went through the roof with COVID, then interest rates started to go up, and that's when things changed. Then we can see here that we peaked early. In April, actually, we peaked for the seller's market. So we have to keep watching this to see what happens with these numbers. This is at the California statewide level. So as it becomes a buyer's market, what you'll see days on market increase. You'll see more inventory, more choices for buyers, and you will see potentially more price reductions. So those will be the trends, theoretically, that we'll see, especially if this trend in the market action index continues down and it becomes more of a buyer's market. And again, look how flat it was before COVID, relatively flat throughout the year for the market action index, and then COVID, boy, did it change everything. Moving into the county data, here's Orange County, and we can see how high it got, almost 94, so almost 100 for a seller's market. Then the big drop from interest rates, things rallied back, but look, our peak again was April for the market action index, and it has since dropped. Don't forget that you can subscribe for this data, and you can get it for the county level. If you subscribe here, you can also get your city or zip code level data, and it'll email you every week. Definitely worth tracking that. Los Angeles, again, we can see that peak in April where for the seller's market, and it has since turned. Riverside, a more gradual turn, but it appears to have turned as well, becoming slightly more of a buyer's market. Riverside and San Bernardino, very gradual. Ventura, we actually peaked a little bit earlier. First 2 weeks of April, we peaked there, and has been dropping ever since. And then San Diego, a similar thing where we peaked in mid-April and it is dropping. Will this market action index continue to shift more to a buyer's market? You haven't peaked early, you've peaked just right. We have a link below so we can jump on a one-on-one phone call to run through your real estate needs, whether you're looking to buy or sell. What are you seeing out there right now? Is it shifted to more of a buyer's market, or is it still a blazing hot seller's market in your neck of the woods? Let us know in the comments below. The next thing you need to know is in this video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you.